Hello and welcome to our YouTube channel, The Loophole. Money Laundering 101. The real playbook of global power. This video discusses financial crime and corruption. No graphic content. Asterisk. Every year, $2 trillion vanishes into thin air. It doesn't disappear. It transforms. It becomes a luxury penthouse in London, a shell company in Panama, a painting sold at auction for twice its worth. This is the invisible empire built on dirty money, and it runs parallel to everything you see. How does a suitcase full of drug cash become a legitimate fortune, and who wrote the rules that make it possible? Money laundering is the process of making illegally obtained money appear legal. Criminals, corrupt officials, and tax evaders use a global network of banks, lawyers, and shell companies to hide the origins of their wealth. Unaud 2023. The scale is staggering. According to the United Nations, between $800 billion and $2 trillion is laundered globally each year, roughly 2 to 5% of the world's GDP. UNODC Financial Crime Report. This matters now because recent leaks like the Panama Papers and Pandora Papers revealed how world leaders, billionaires, and organized crime use the same tactics. The system isn't hidden in shadows anymore. It's documented, mapped, and operating in plain sight across tax havens from the British Virgin Islands to Dubai. Understanding how it works means understanding how power really moves in the modern world. The modern money laundering playbook emerged in the 1970s when drug cartels needed to explain their mountains of cash. Colombian traffickers would smuggle dollars to Panama, deposit them in compliant banks, then wire the funds back as legitimate business loans to historical archives. The system worked because it exploited gaps between national banking laws. In 1986, the United States passed the Money Laundering Control Act, making it a federal crime. Other nations followed. By 1989, the Financial Action Task Force was created to coordinate global efforts. FATF Foundation documents. But enforcement remained uneven. As rich countries tightened rules, new havens emerged in places with weak regulation and strong banking secrecy. The Internet age turbocharged the system. Wire transfers replaced suitcases. Shell companies could be created online in minutes. By the 2000s, according to the International Consortium of Investigative Journalists, over 200,000 shell companies were being used to obscure ownership of assets worth trillions. ICIJ Panama Papers database. Law enforcement struggled to keep pace with digital speed and legal complexity. The 2016 Panama Papers leak exposed 11.5 million documents from law firm Mossack Fonseca. The files revealed how presidents, prime ministers, and criminals used identical structures to hide wealth. ICIJ investigation report. Public outrage followed. Some officials resigned, but the infrastructure remained largely intact. Leaked documents and court cases provide the clearest evidence of how laundering operates. The three-stage process is well documented by law enforcement worldwide: placement, layering, and integration. FATF technical guidelines. Placement is introducing dirty money into the financial system. This might mean structuring deposits below reporting thresholds, a practice called smurfing, or using cash-intensive businesses like casinos and car washes. FinCEN reports. Layering involves moving money through complex transactions to obscure its origin. Funds pass through multiple accounts, countries, and corporate entities. Integration is when the laundered money re-enters the legitimate economy as apparently legal wealth. Court records confirm specific methods. In the Danske Bank scandal, approximately 200 billion euros in suspicious transactions flowed through the Estonian branch between 2007 and 2015, according to banking regulators' Danish FSA report 2018. Whistleblower testimony revealed that compliance officers were allegedly ignored or silenced. In the Malaysian 1MDB case, over $4.5 billion was reportedly stolen from a sovereign wealth fund, then laundered through luxury real estate, art, and film production U.S. Department of Justice filings. 2020. Not everyone agrees on the severity or solutions. Some economists argue that strict anti-laundering rules hurt legitimate businesses and privacy without significantly reducing crime. Cato Institute Policy Analysis, 2021. They point out that compliance costs for banks now exceed $200 billion annually. While conviction rates remain low, others dispute whether tax havens are the primary problem. Some legal scholars note that shell companies have legitimate uses for business, privacy, and asset protection. Chamber of Commerce statements. The line between legal tax planning and illegal laundering is genuinely complex and varies by jurisdiction. There's also debate about effectiveness. Despite decades of regulation, the estimated volume of laundered money has not decreased significantly according to UNODC data. This raises questions about whether current approaches work or simply create paperwork while sophisticated networks adapt. The damage flows downward. When corrupt officials launder state funds into foreign real estate, hospitals go unbuilt and schools lack teachers. In developing nations, stolen wealth often equals years of national budget, World Bank governance indicators. Citizens pay higher taxes to cover shortfalls they didn't create. Money laundering also enables the crimes that generate dirty cash in the first place. Drug trafficking, human trafficking, and arms dealing continue partly because profits can be hidden and enjoyed. Victims of these crimes are trapped in cycles that money laundering helps perpetuate. The system rewards the ruthless and punishes the vulnerable. Communities suffer too. When criminal organizations buy legitimate businesses with laundered money, they can operate at a loss, undercutting honest competitors. Local entrepreneurs can't compete with operations funded by drug money. Jobs disappear. Neighborhoods decline. The social fabric tears. Think of money laundering as bleaching a stain. The dirt is still there chemically, but it looks clean to the naked eye. The financial system acts as the washing machine, and layers of transactions are the rinse cycles. By the time the money comes out, it's nearly impossible to trace back to the original crime. Without enormous resources and international cooperation, legal experts point out that money laundering isn't just about hiding crime. It's about converting power. Dirty money has limited use. You can't buy a mansion with suitcases of cash without triggering alarms. But once laundered, that same money buys influence, legitimacy, and protection. It purchases politicians, law firms, and real estate that can be passed to future generations. This connects to bigger questions about global inequality and justice. When wealthy criminals can afford the lawyers and structures that make laundering possible, while small-time offenders face harsh penalties, the system appears designed to protect power rather than punish crime. The International Monetary Fund has noted that laundering destabilizes economies, distorts markets, and undermines democratic institutions. IMF Working Paper 2019. We know the methods. Shell companies. Compliant banks, complex transactions across borders. We know the scale, trillions annually. What we don't know is exactly who benefits at the highest levels, because the system is specifically designed to hide that information. Court cases give us glimpses. Leaks provide snapshots. But the full picture remains deliberately obscured. Here's what happens next as technology and politics collide. In the near term, cryptocurrency presents both challenge and opportunity. Bitcoin transactions are traceable, but mixing services and privacy coins complicate enforcement. According to blockchain analysts Chainalysis reports, 2024. Regulators are developing new frameworks, but implementation varies globally. Confidence high that crypto will remain a battleground. Artificial intelligence is being deployed by both sides. Banks use AI to detect suspicious patterns. Launderers use it to create more sophisticated structures. This technological arms race will likely intensify with uncertain outcomes. Confidence, medium, that AI significantly changes detection rates in the next 5 years. International cooperation may improve as leaks create political pressure. The OECD has pushed for beneficial ownership registries, where shell company owners must be disclosed, OECD tax transparency reports. Some nations are complying. Others resist. Real change requires unanimous adoption, which historically proves difficult. Confidence, low that major tax havens will fully comply voluntarily within this decade. Money laundering isn't a victimless technical crime. It's the infrastructure that allows power to flow invisibly from the desperate to the protected. Understanding the playbook doesn't solve the problem, but ignorance guarantees it continues. If you want to understand how these networks intersect with political power, watch our next video. The Offshore Empire: How Tax Havens Shape Elections. The connections will surprise you. Source notes and disclaimer. This script draws on publicly available documents, including UNODC reports, FAT technical guidelines, court filings from the U.S. Department of Justice, investigations by the ICIJ, and regulatory findings from financial authorities. All claims involving living individuals use neutral language reflecting alleged or reported information unless court-proven. Money laundering methods and statistics are subject to ongoing investigation and revision as new information emerges. This video is for educational purposes and does not constitute legal or financial advice.